Hi everyone, good morning and welcome to today's morning report and analysis videos on Thursday 16th of March with me, Richard Perry, market analyst at Handset Markets. We had the Fed meeting last night and the Fed hiked rates, but it was a dovish hike, and there was quite a significant move against the dollar, which pulled the dollar sharply lower. I think the reason behind that was just generally the Fed's sort of caution that came out in the projections and also the dot plots. No real change to the dot plots, which continue to show 3 hikes for this year, 3 hikes for next year. Just a minor 0.1% increase on the dot plots to 3% in 2019, and also I think the sort of caution in the growth numbers as well. Long-term growth projections still only 1.8%, and that was where it was last projections meeting, which was December. So no real change there, and I think the market took that fairly sort of dollar negatively, and you can see here that the dollar fell sharply. That was sort of coming as the sharp reversal on the 2-year yield came through, and also the 10-year yield. There has been a bit of an unwinding move today, but it'll be interesting to see how long that lasts for, because I don't think the dollar is going to be especially strong for a while, really. Also overnight we've had, or yesterday we had the Dutch election, and it showed a pretty decisive move away from the populist Geert Wilders party, Freedom Party, pretty much rejecting the populist movement there, and that has helped to tighten the spreads in Europe. The French-German spread has been seen to be a bit of a sort of a barometer of risk appetite or risk in terms of political risk going to the French election, and the election in the Netherlands suggests that perhaps there is less of an opportunity or less chance of a Marine Le Pen victory, and that has tightened the spreads there. So falling spread is better for risk appetite, and that's interesting as well. So we've got this move as the US markets, or US Wall Street markets, pulled strongly highest yesterday on the back of that Fed meeting, the dovish hike. That has helped to drive European markets higher today. Across the board we're seeing strong gains, about 1% on the DAX, 0.8% on FTSE and CAC. So good moves there at the open. In terms of what we've got to look forward to today, we're looking for further interest rate decisions, but first of all we've got the Eurozone inflation data, now expected to be confirmed at 2%, 1.8% last month. It was on 2% on the flash. That would be confirmed, likely to be confirmed at 10 o'clock today. And then we look towards the Bank of England, which is expected to hold rates as they are, and also show no change in the unanimous decision as well, 9-0 on the vote to keep rates unchanged, and also on the Bank of England Bank of England quantitative easing, which is expected to again have no rise there. So it's interesting that we're having this coming on the back of this Fed meeting today, which I think Fed meeting yesterday, which I think will sort of continue to dominate the market outlook. Now we've also got a bit of sort of lower tier US data into the afternoon. We've got some housing data for the housing starts and building permits, both expected to come in at 1.26 million. And also we've got jobless claims again around about the same where we were last week. We've also got the Philly Fed, 30 is the expectation there. Now the Philly Fed has been a strong chart. Look at that rise in Philly Fed manufacturing, which would suggest economic activity in the region is very strong, and 30 would still be a very strong number, so that's expected to show today. So lots going on this afternoon. Now my chart today is the DAX, and the DAX has been strong today and breaking out. Now it's still within this big uptrend channel. If I zoom out, you can see this uptrend channel that we've been in since June last year, and it's sort of moving back towards the top of that channel, having broken out above above 1282, and that is a strong breakout, and it's holding. That is there is a gap, obviously quite strongly open from 12027. But I think you're going to get support between 12 67 and 1282 now, on a little bit of a rebound, sort of corrective move initially, but I think the momentum is strong. I think the breakout is positive, moving towards the upper side of that trend channel. Here's the hourly chart where you see the move just pulling RSI on the hourly chart into strong territory. Just a little bit of a consolidation on that, but I think little corrections back into the support around about 12067, 12082 could well be seen, and that is, as I said, supportive on the breakout. So I think it would be a nice little buying opportunity, but there is certainly an attitude here, I think, amongst the bulls that the bull market could well be ready to resume. Now, you sort of look over the last 5 years, you can see it's not a million miles away from the all-time high, which was 1390. Sorry, 12,390. So there is upside potential to go, and not a great deal of resistance between here and there. So yeah, I think we're going to continue to run on this one. Little corrections are a chance to buy. So I wish you good luck in your trading today, and I will speak to you later.